Welcome to the Property Code. I'm your host, Nick. Today, I want to share the single best real estate investing advice I have ever received and how I applied it in 2025 to navigate today's dynamic market. Back when I first started, my mentor, an experienced investor named Sharon, pulled me aside over coffee and said, focus on the 3 Ps: people, place, and purpose. At the time, I thought she was speaking metaphorically, but over the years, I came to understand just how literal and transformational her guidance could be. Let me tell you a story about how those 3 principles reshaped my approach and led me to success in 2025. 2 autumns ago, I was reviewing listings with a partner named Ava. We had saved up a modest down payment and were excited to find our first multifamily building. We visited dozens of properties, but none seemed compelling. One afternoon, a broker took us to a block of 4 duplexes near a revitalizing downtown district. The neighborhood had once been industrial, but people were drawn to new co-working spaces and pedestrian-friendly parks that had sprung up. At that moment, I thought about people, the first P. I realized that beyond numbers and comparable rents, the human element, the kinds of tenants we would attract, would determine long-term stability. We saw young professionals drawn by a tech incubator nearby and older couples seeking walkable streets. That diversity promised a resilient rental pool. A few weeks later, as we dug deeper, I reflected on the second P, place. Instead of fixating on raw metrics alone, we used an AI-driven analytics platform to layer demographic data, rental demand forecasts, and climate resilience scores. The AI model flagged this spot as a micro hub, because remote work had turned the city into a magnet for creative entrepreneurs. It also showed that flood risk was low due to recent infrastructure upgrades. With interest rates near 5%, we needed a location unlikely to suffer value declines. Understanding the location's trajectory helped us negotiate a fair price that left room for modest value-add renovations. We locked in our offer immediately. As spring arrived, our renovations began. We installed energy-efficient windows, smart thermostats, and rooftop solar panels. That pointed to the third P, purpose. For us, the investment purpose was not simply cash flow. It was aligning the property with sustainable standards that 2025 tenants valued. In addition to appealing rent premiums, the upgrades qualified for local green rebates that covered nearly 40% of our renovation costs. Tenants were willing to pay slightly higher rent for lower utilities and environmentally friendly features. With carefully designed units, we balanced affordability for renters and higher net operating income. The building quickly reached full occupancy, with new leases signed in days rather than weeks. Within 12 months, our rent rolls climbed by roughly 7%. As rates continued to shift, we benefited from locking in long-term financing at just under 5%, a rarity in 2025's market volatility. Because we focused on the 3 Ps, any hypothetical downturn in single-family neighborhoods had minimal impact on our portfolio. People stayed for the vibrant community. Place offered stability, and purpose delivered both social and economic value. Sharon had also taught me to maintain liquidity and continuously learn from every deal. In 2025, marketplace platforms let me syndicate small equity stakes in larger projects. I sold a fractional interest in this duplex building to a small group of investors, freeing up capital to identify the next opportunity. Meanwhile, I monitored emerging trends, smart building technology, co-living spaces, and mixed-use developments through online learning networks and quarterly mentor calls. Each new lesson fueled better decisions. The overarching lesson my mentor shared was that real estate investing is not about chasing the hottest market or the biggest tax write-off. It is about understanding who will live or work in your space, why the location matters now and for years to come, and what purpose the property can serve beyond mere financial yield. By weaving these 3 Ps, people, place, and purpose, into every decision, you build a resilient portfolio. Looking ahead, whether you invest in multifamily units, single-family rentals, commercial offices, or alternative assets like manufactured housing communities, the 3 Ps remain timeless. In 2025, emerging technologies and shifting lifestyles have only underscored their importance. Tenants now expect energy-conscious homes, remote work-friendly spaces, and community-centric amenities. Financial returns still hinge on fundamentals, but success lies in understanding the human story behind each investment. That is the best real estate investing advice I have ever received. And by applying it during today's era of hybrid work, rising sustainability standards, and digitized analytics, I have seen firsthand how it can transform a simple property into a compelling long-term asset. I encourage you to consider people, place, and purpose on your next deal. Thank you for listening to The Property Code. If you found value in this episode, please subscribe. Until next time, stay strategic and keep building your path to financial freedom.